Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, now that we have the elections looking through the rearview mirror, everything is dominated by the fiscal cliff. Rates versus revenue is dominating the headlines, dominating all asset classes. But is it dominating volatility? Let's talk about it. Let's talk about a recap what happened this past week with regards to major asset class volatility. Starting with equity volatility. Today, equity vol is down 1% on the day. There was a large spike with most implieds on Wednesday. However, implied volatilities on the week are unchanged, back to levels that we've have been looking at maybe at the beginning of August. And what's so funny is that the S&P 500 was trading at about the same level at the beginning of August as it's trading now. So that's in check. Oil. We saw a big spike in oil volatility on Wednesday. Today, oil's down 4.5%. On the week, oil vol is down 2%. Again, that's a big generalization looking at the three major sectors of oil that are traded at the CME. What's interesting to note is that oil volatility in general is trading at about the same level that we saw about 10 days ago, and crude oil was trading at about the same price. Moving over to metals, specifically gold. Gold vol rallied all week, and especially on Tuesday, an enormous spike on Tuesday. Today, gold took a breather. Implied vols down about 5.5%, although gold on the week up about 4%. These are vol levels that we've seen at the beginning of October, and what's maybe really important to consider is that beginning of October, gold was trading at about $50 higher. So traders are thinking that gold vol still has ways to go on the upside. On the other hand, we have FX vol. FX vol, when you look at all the G7 currencies, dripped lower every single day. Beginning on Monday, there was really no spike at all. FX vol was down 1% on the day today. Down about 4% on the week. And just to be fair about it, commodity currencies, Canadian, Aussie, did lag a little bit, but in general, G7 currencies down about 4% on the week. This is so important to consider because we look at volatility sometimes with a microscope, and really we need to put it into perspective. The elections are behind us. Now the headlines are dominated by the fiscal cliff issues, and everything else seems to be irrelevant. When you look at the major asset class volatilities, the only one right now that seems to be the outlier is gold. On the other hand, the other outlier, if there is one, is FX vol. We haven't seen FX vol this cheap in a very, very long time, perhaps almost 2 years. So is the dollar going to stay in a tight range? We'll see. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.